pandemic, share markets across the world, including that of India, witnessed a rapid recovery. In FY21, the country's major index, Nifty, recorded a growth of around 71%, and in FY22, it registered an increase of about 19%. However, if there was a particular section of the economy that was impacted the most after the pandemic, it was rural India. A significant portion of demand in sectors like cement, paint, FMCG, plastics, and two-wheelers stems from rural areas. In this video, we will understand the impact of rural areas on the sales of two-wheeler segment and also explore investment strategies that you should opt for while investing in shares of two-wheeler companies. India may be at the top of the list of rapidly growing countries worldwide, but this rapid growth pace is not spread uniformly across all sections of the Indian economy, especially in rural areas. This disparity was only exacerbated during COVID when rural demand was severely affected. Subsequently, adverse weather conditions have further dampened demand. However, there has been a recovery in two-wheeler sales figures in FY24 with an increase of over 10%, which indicates an improvement in rural demand. Rural areas are the primary drivers of two-wheeler demand, accounting for over 50% of total sales. With consistent recovery in both urban and rural demand, two-wheeler sales have already surpassed pre-COVID levels. In FY24, two-wheeler sales jumped 13% to reach around 1.85 crore units. There has been a notable increase in two-wheeler sales in FY24, with sales increasing by approximately 13% to around 1.85 crore units. According to a survey by Nielsen, rural demand has exceeded urban demand during December, January, and February for the first time in 3 years. Post-COVID, the recovery in two-wheeler sales was largely driven by premium segment, that is, bikes above 150cc. Premium segment bikes, which contribute 18% to total sales, witnessed an increase of over 10% in FY23 compared to only 14% contribution in total auto sales in FY18. Over these 5 years, the contribution of entry-level bikes, that is between 76cc to 100cc, and commuter bikes, that is between 110cc to 150cc, to total sales has declined significantly. This comes despite the two-wheeler marketing plummeting to a decade low in FY22 and showing limited recovery in FY23. How are two-wheeler companies expected to plan out the rest of the year? Will these companies focus more on premium bikes which sell in urban areas or entry-level bikes which are more popular in rural areas? According to Mantri Finmart's Arun Mantri, there is a high possibility that instead of entry-level bikes, mid-sized bikes or bikes between 125cc to 200cc will be more in demand. Thanks to easy loan sanctioning, premium bikes like Royal Enfield are selling quite easily in rural areas. Given these changes in demand patterns post-COVID, the pertinent question is, what should your strategy for shares of two-wheeler companies be? Arun Mantri, founder of Mantri Finmart, suggests that you should consider Bajaj Auto with a target of 10,600 rupees and Eicher Motors with a target of 4,300 rupees from a 3-month perspective. If March quarter results turn out to be favorable, targets of 11,000 rupees for Bajaj Auto and 4,700 rupees for Eicher Motors can be considered for a 6 to 9 month horizon. The valuation of TVS Motors in the two-wheeler EV segment, which is the market leader, is quite high, he notes. Overall, there has been a shift towards mid-sized cars in the passenger vehicle or PV market as opposed to small cars. Leaders in this segment include Toyota Maruti, Tata Motors, and Hyundai, while Honda has fallen significantly behind. Therefore, it remains to be seen as to where the two-wheeler segment will settle. That is why it is advisable to invest in selected companies in this segment from a short-term perspective and make decisions on long-term investments only based on the upcoming quarterly results.